Thank you very much, Franca. Dear participants, dear colleagues, a very warm welcome to the third conference. This is our third conference on gender issues organized by the three European supervisory authorities, the EBA, EIOPA, and ESMA. As you know, we have a strong commitment as public organizations that we should reflect the society we are embedded in. At the two previous conferences in 21 and 22, we've been looking into the issue of gender equality first within a smaller group of EU agencies, and then broadening up to all EU agencies. This helped us progress, share our experiences, but also receive inspiration, guidance from prominent speakers and practitioners. Today, we want to do the same, but much more. For this third edition, we want to go a few steps ahead in three main respects. Firstly, we want to enlarge the circle and go beyond our immediate community of EU agencies. We want to involve our direct stakeholders, that is the competent authorities from the 27 member states in the EU. They are our key partners. We work with them daily. So we are very glad that many of them are attending this conference with us today. Secondly, we want to explore the dimension of financial services and gender under the lenses of the economic benefit of it. Looking into data, into trends, we can get to the economic value of achieving better equality, better opportunities for staff within our organizations, within the financial sector, and as a result, within our economies more broadly. As we will be discussing, gender equality does not contribute only to a fairer society, it does, but it can also contribute to a stronger and more resilient economy. Finally, we want to discuss these questions not only in a European context. We also want to hear about approaches, about data, about trends through a much more global prism. And we are extremely glad that we will have very inspiring speakers today in the different panels, sharing with us their personal and their professional experiences in this gender equality journey. To lead us through this amazing agenda, we are very fortunate to have Nicholas Comfort from Bloomberg, who will be moderating the entire event. Nicholas, I give you the floor. Over to you.
Thank you very much, François-Louis. I'm very happy to be here to have the chance to speak to so many illustrious speakers. First up is Nedja Calvino from the European Investment Bank. I have some good news and bad news to share in advance. The bad news is that her speech will be relatively short. The good news is that it gives us a bit of time on the end of each panel for a question or two. So heads up to the panelists that we may have an audience question or two at the end of your respective panels. To audience members, please type in the chat question. And if there's someone specific you'd like to address it to, then that would be helpful as well. Thanks very much. And now over to Nedja Calvino.
Warm greetings to you all. I am delighted to be part of this important dialogue. The topic of economic empowerment of women is not only close to my heart, but central to the values of the European Union and our mission at the European Investment Bank Group. From support to European venture capital funds and startups led by women, to strategic programs to support clean cooking and primary health, microcredits and business initiatives outside and inside the EU, for example, working on inclusion with financial services providers, gender equality is a transversal goal of all our actions. It is not only the right, but also the smart thing to do. Every euro invested in women's empowerment contributes to stronger, more peaceful, prosperous and stable societies and economies. And this is at the heart of European policy priorities, more important than ever in today's complex geopolitical context. Financial inclusion is a powerful tool that can unlock human potential. When persons have access to finance, they are empowered to start a business, create jobs, be in the driving seat of their own lives. Access to financial products and services also helps us prepare for difficult periods, building resilience against external shocks, for example, health emergencies and extreme climate events. Many female-owned and led businesses outperform their male counterparts on various fronts. Women-led firms also achieve higher environmental, social and governance scores. They attract and retain more women and contribute to reducing gender disparities while promoting more inclusive growth. And yet, our own research at the EIB shows that women entrepreneurs are still facing substantial barriers to access finance and raise capital for their firms. While emerging market economies are often cited when discussing gender finance gaps, we should acknowledge that even within the European Union, women do not face a level playing field in accessing finance. Our research has highlighted several challenges. Female startups and scale-ups in the EU are still rare. 23% in the United States, 20% in the United Kingdom, and 11% in the European Union. Also, women-led firms say access to finance is one of the greatest obstacles. For all these reasons, the EIB Group is working to advance gender equality and women's economic empowerment. These goals are included in our business model, ensuring equal access to the assets, services, benefits, and opportunities our investments generate. Just to name a few examples, we are contributing to global initiatives such as the 2 Weeks Challenge, launched by the G7 in 2018, and the gender marker developed by the OECD. Inside the EU, the EIF's Empowering Equity Conference, now in its 3rd edition, nurtures the ecosystem of female venture capital, private equity, and private debt fund managers. It will convene again this year in Brussels and will contribute to raising visibility on other initiatives such as the Empowering Equity Mentoring Programme or the EU Gender Finance Lab for commercial banks. We have also just launched the Women's Climate Leaders Network to bring together key figures in the public and private sector that can make a difference. Together, we can help make the green transition a European success. I do think we have a collective responsibility to build a network among commercial banks in the EU of good practice when it comes to gender equality and financial inclusion. After all, as I said already, this is not just nice to have. It is about bolstering competitiveness, growth, and economic security. This will require extensive collaboration between the European supervisory authorities, the European Central Bank, national competent authorities, ministries of finance, EU agencies, and industry associations, but I am sure we are all aligned in supporting this goal. A final word on gender policies at home. Public institutions should lead by example, promoting gender balance in our staff and senior management teams and supporting excellent female professionals is a key objective in our HR policies at the EIB Group. We can also learn from each other's experiences and best practices how to ensure that our institutions benefit from diverse teams, leading to best possible results, as evidence shows. On that note, let me wish you a successful conference. You can count on the EIB Group to support all efforts in advancing gender equality in and through the financial sector. See you soon.
My thanks to Nadia Calvino for those opening words. I have the pleasure of opening the first panel, and we'll be joined by Carmina Di Noia, Director for Financial and Enterprise Affairs at the OECD, Elizabeth McCall, a member of the ECB Supervisory Board, and that's one of the most exciting portfolios at on the Supervisory Board. And I, for one, we sad to see her step down at the end of her term this month. Finally, Edwige Nuyens, who's CEO at the International Banking Federation. And now a quick reminder to the panelists that the audience today is largely made up of people from public institutions. So if you can, maybe you can follow Nadia's opening remarks and kind of give us, if you tie your remarks and your experience of your own institution to the work you do every day. And so, but obviously also the private sector is also exciting. So feel free to illustrate your points with examples of supervised institutions and the wider economy. My first question goes to Carmina. So we heard Nadia making some pretty fundamental points just now. Could you share an OECD perspective on the economic impact of gender diversity?
Thank you. I hope you can see me and hear me well. And thank you, first of all, for this invitation. I'm very honored to be here and also to be, I guess, well, there is a good gender diversity in the panel. So I'm happy. I mean, for us and at the OECD, obviously, is a broad, international institution all over the world, 38 countries. But actually, we work a lot also with all, G20, FSB, and others. Now, the economic advantages, I would say, so we do a lot of research, evidence-based, and I think broadly, the economic advantages of diversities, and including gender diversity, are really evident in OECD, research with a diverse team and gender diverse teams driving stronger, financial and economic, outcomes and governance outcomes. Again, we like data. You see, or you can see our fact book. The corporate governance fact book is basically our monitoring instrument we publish every 2 years on the application of the OECD corporate governance principles. Shows really that companies with gender diverse boards tend to achieve better risk management and innovation. Maybe this is also due to the personal characteristics, of different board members. Actually, also we have all the numbers of presence, which is a necessary, I would say, but not sufficient condition. But now women, we have different systems in different countries. Some of them they have binding quotas for different genders in board. Other recommendation, corporate governance codes. Now, broadly, women hold around 27% of board seats at large companies, which is actually a significant rise from past years. The thing is that, however, female representation in the top leadership remains limited. Only 12% of board chairs and 6% of CEOs are women. And these figures so underscores, I would say, both the progress made, but also the need for continued efforts to reach gender parity in corporate governance, which obviously is a question not only for boards, but also for all the staff, and maybe we'll hear later. Also, interestingly, we work a lot on trade, international flows, capital movements, but also FDIs, so foreign direct investment. So in our qualities policy toolkit, we emphasize gender diversity as one of the 4 pillars of the policy toolkit. So promoting the inclusion of women in decision-making position within firms that attract foreign direct investment. And I have to say, countries adopting this approach see higher return on investment as diversity enhances understanding of market demographics and foster innovation. The OECD also, for example, the quality review of Canada, we did obviously we work also with single countries. For example, assess how FDI impacts gender equity and economic performance, identifying that diverse leadership teams achieved higher profitability and stronger market adaptivity. So these indicators, again, underscore the value of integrating all diversities, in particular gender diversity, into governance of a strategic economic lever. Then we have similar work in competition, but maybe I stop here, but obviously happy to also to give other details.
Well, if I may follow up on that, Carmine, and we at Bloomberg, we are obviously big advocates of data, and maybe you could tell us a little bit about the data gaps that are out there, and that what you would really like to, on your Christmas wish list or elsewise, what data you would like to have, and how we can go about getting that data.
Yeah, this is, thank you. Obviously, in a sense, we have the similar concern. Too often also around, I would say, in the research, in the policy debate, we sometimes have misleading, I would say, indicators, and we need peers, and apples. Otherwise, we make be confused. So I have to say, although there has been substantial progress in collecting gender data, significant gaps remain. Especially, let's say, for example, one area is the state-owned enterprises, for example, in responsible business conduct, also in FDI impact. So, for example, we had the analysis on SOE we conducted. We have this OECD dashboard on gender gaps. And we found that, let's say, gender segregated data is still unfrequently collected. So this limits the understanding of diversity within the key sector, this key sector. Additionally, for example, within the field of artisanal aircraft and small-scale mining, ASM, where women are often the primary workforce, we could say, unfortunately, data collection practices often overlook gender, so leading to a lack of tailored policies that could enhance female workers' safety and economic empowerment. Also, the anti-corruption division, we manage the the convention of legal convention on foreign bribery, is currently examining data gaps in the nexus of foreign bribery and gender, such as the need for gender segregated data from law enforcement agencies and compliance units. So this is also for our attending people that are in different institutions, the compliance units in business, but also on how corruption may affect women differently from men, maybe due, we may talk later, also due to some, let's say, economic weakness and maybe financial literacy issue. We have been addressing these gaps through initiatives such as also the FDI Qualities Policy Toolkit, which I mentioned, which now include gender-specific data. And also we have the Responsible Business Conduct Center work to promote gender-responsive due diligence in the global supply chains. And we're working a lot. Obviously, these gaps hinder the ability, again, of institutions, of many of you, to make fully informed policy decisions. So without comprehensive gender data, it's often challenging also to convince key stakeholders from public states, but also to business leaders and high-level management of the necessity and economic benefits of investing in gender data. So this data, and I conclude, is essential not only to pinpoint where interventions would be most impactful, but also to reinforce its value through evidence, and evidence-based is our key issue, creating also a stronger foundation for policies that support inclusive growth. And I give you back the floor.
Thank you. And Edwige, may I come to you now to pick up on 2 points that Carmina was making. So first of all, in terms of where within organizations maybe there are bottlenecks or glass ceilings that you see within your member institutions. And secondly, on data, is the what KPIs do you look at? What do you think we could be doing to improve the data on the promotion of women at various levels of organizations? Thank you.
Yes, thank you so much. And so I'm working in the financial services for 40 years. So I've, of course, had many exchanges with all the European institutions that are present here. But I've also been working to get more women in top positions in my work at European Women on Board. So I will try to give the two perspectives, my knowledge as financial services, but also what you can do. So you can clearly see that there is a movement amongst companies to get more women at board level. That's actually something that has worked better. So if you see at companies, also specifically at bank level, within boards, you have already more women than before. But you have differences as well. So there are clear differences amongst countries and clear differences. Clear differences between companies, between individual companies. So the bottlenecks are clearly at board level. Actually, normally you can appoint top down and you can appoint from a broader talent pool. That is what is happening. So if the company is setting objectives, it will be more easy to get them at board level. And that is what you have clearly seen in Europe, especially in those countries that have set objectives, the number went ×5. At executive level, actually, there is a bigger bottleneck because there it is a matter of pipeline. It's a matter of pipeline, have sufficient women that are actually picked up in high potentials, that you make sure that the waterfall is kept under control, and be very intentional in each promotion round to have sufficient women and to foster actually women to top roles. I would say in terms of data, I would differ from opinion from Carmine. We have an excellent agency at European level, EIGE, that gives us figures, by level, that gives us figure by country. And then you have instances like European Women on Boards that can give you very clearly the countries and the companies that lag behind the objectives that we have been setting. And with the latest European directive, companies will be obliged to publish figures. So I expect that data will be much more fine-tuned and will be more readily available.
Thank you very much, Hedwig. And now just to recap a little bit for Elizabeth, we've been talking about data, we've been talking about also sort of where there could be bottlenecks within institutions, and there's difference of opinion already. Journalists love that already on the availability of data. But Elizabeth, maybe you could tell us what data is most relevant for you as a banking supervisor, and what does that data tell us or tell you about the state of gender diversity at supervised institutions? I imagine the boards are probably a big focus for you as well.
Thank you very much. Thank you, and it's a pleasure to be with all of you. Really, this is a personally important topic, and it's important for, as Carmina was saying, you know, the research points out how important this is for the stability and the safety and soundness of our institutions. The best risk decisions get made when we have a diverse set of decision makers at the management body level. So at the ECB, we have taken quite a particular interest in this topic. And interestingly, when you go back to, you know, the earliest stages when we began collecting data, we saw that there was a tremendous lack of gender representation in the management bodies. And so over time, what we've been doing is focusing our supervisory powers, the various aspects of our toolkit, in on this particular issue, very much with the thought that we want to have a diversity of ideas, a diversity of thinking at that management body level, at that supervisory board level, and including in the management, senior management teams. If you look at the current picture, there's around 35% of the non-executive directors are the underrepresented gender in management bodies, and 19% of those 19% are executive directors. But if you look at the flows, there's a clear tendency over the period of time. Slow, I hate to say that, slow, but yet steady increase in the female appointments that we've been seeing for board positions. In 2015, the number stood at 24% of female appointments. And in 2024, it reached nearly 40%. Interestingly, you know, in 2024, the number of female appointments on the subsidiary level was almost twice as high. There were 117 appointments that happened there as for the top level entities, where there were 64 appointments. Okay, so we're moving up the value chain, I would say, over some time. I'll take it. But on a positive note, and this is really a positive note, 97% of those appointments referred to newly appointed and not reappointed females. So that is, you know, that's an important measure of whether we're making a, you know, really making a difference in how this progress is being tracked. I mentioned using the supervisory toolkit, Nicholas, and you know, maybe it's worth spending just a moment on that. What we've been doing is focusing in on the whole value chain of how we supervise institutions. There's the starting point where there's a fit and proper assessment for an appointment to a board. We've been using that important birth process, if you will, to gear it toward putting more emphasis on representation of the underrepresented gender being increased. That means that when we're being presented with applications, we're looking at the whole picture. What is the collective suitability of that board? What does the gender representation look like on that board? What does the succession management look like? We also have been following through, you know, there's the fit and proper beginning process where there's an authorization. Then there's ongoing assessments of fit and proper status of board members. Then there's ongoing supervision. And by connecting to the ongoing supervision, which is our SREP process, our annual process, in looking at the overall governance arrangements and then connecting it to what's happening in the fit and proper process, we've been stepping up on the escalation ladder, our supervision. And what that means is that where institutions haven't had diversity policies in place, for example, we've insisted on it. We've taken operational acts, we've issued decisions. It was the case that we had very few institutions with diversity policies in place when we began the escalation process. Today, it's the case that nearly all of our institutions have a diversity policy in place. We are also subjecting institutions to detailed assessment with regards to the fit and proper appointments where they have deficiencies in diversity, meaning that we want them to put plans in place to follow through on their recruitment processes and how they're moving ahead with that component. So, you know, it's I think using the full panoply of our supervision, the steps that we can take when fit and proper appointments are made, when ongoing fit and proper assessments are made, even when it's not a diverse candidate that's being put forward, what's the plan that the board has? And in some cases where I've challenged some of the outcomes and we're moving ahead with an appointment where there's a deficiency in gender, the explanation is very worthwhile, that they offered the position already to a woman and it was turned down, or they have 3 or 4 women in the pipeline and they are going to be included in the next round. So I used those words before, slow, but steady progress. And, we've stepped up our efforts. Our banks need to continue to step up the efforts, with the goal being good risk management decisions being taken at the end of the day.
Thanks very much, Elizabeth. I think especially those points you were making about the subsidiaries and then the reappointments rather than just the new appointments rather than just reappointments were especially helpful to speaking towards the momentum. But can we drill down a little bit here, Elizabeth? I mean, the statistics on one hand seem encouraging, but if I look at the composition of executive teams at banks at the moment in Europe, I find there are a lot of sort of female HR heads, female communications heads. And there are increasing numbers of female chief risk officers, but the number of female CEOs, I think among the top 50 banks in Europe, it's only 2, and CFOs, it's a similarly dismal picture. So, or look at the heads of businesses as well, generally tend to be male as well. So, is there? Have you picked up on that within the new appointments, there is also momentum there in terms of people who drive the risk culture of supervised institutions?
Yeah, those are dismal statistics. There's no way around that. Those are dismal statistics. I'm very glad to see Hedvige here, because I know the work that she's been doing has been, groundbreaking, watershed work to try to move women into those areas. There's a lot of reasons for it. And I tell you a story. When I came out of investment banking, spent 10 years there. It was very diverse, I have to say. I was in public finance, which maybe attracted more women, but we had, really across all levels in that area, a lot of women working. And then I became banking superintendent, and there were literally no women. And what I began to realize is that the investment banking sector was far less hierarchical than the banking sector. So my entry into such a high-level position, well, it's the proverbial rat in the snake. If the women had only started in the 80s, they weren't making their way to the top echelons by the time I became banking superintendent in the late 90s, early 2000s. This hierarchical component, I think, is one of the reasons why we see such a lack of gender diversity in senior management positions in the banking sector in Europe. And banking sector in Europe certainly lags on an overall basis, not on a country by country basis, because I can hold up some countries that are very diverse. But as a general matter across Europe, the numbers are far lower than in other markets. We've just issued a guide on governance and risk culture. And if you have a look at that guide, there are important provisions in the guide steering institutions toward incorporating more of a focus using the diversity policy, covering all the different diversity aspects, putting targets in place at the management body level for sure. And that's where you'll start to see senior management increasing at that level. There's very explicit language about the need for management bodies having the right composition of members, including diverse perspectives, experience, and knowledge. We go beyond the gender diversity point there, which I think is important to also do. Geographic backgrounds, coming from different disciplines, age representation. These are also important components. I think there's another piece that maybe I would just add into your thinking, and it's more of a qualitative comment, if you will. In my experience, when vacancy notices are put out for certain positions, or when populations of eligible people are surveyed about their desire to move up and take the next rung on the ladder, what you find is that male candidates will look at a vacancy notice, which will have certain requirements for the position requirements. It needs to have this, it needs to have this, it needs to have this. And the man will look at it and say, oh, I don't have that, but this is just like that. Or I don't exactly have that. I didn't spend 4 years doing that. I spent 3, but I spent a year doing this, which was like that. The women look at these requirements, bang, bang, bang. And what they say is, I don't have that, I don't have it, and they don't apply. And it's this component, it's much more qualitative. It's certainly not supervisory, but I would encourage thinking about broadening position descriptions, recognizing that hesitation to deal with that problem. And on the other side of it, you know, all of the work that we can do to encourage women to apply, to think more broadly, to give it a try. There's a learning aspect to even going through that process. But because we have to deal with this on, you know, not a requirements basis only. We have to get the population wanting to move up to the next level on the ladder as well. So I think there's a lot of dynamics afoot here that all of which need encouragement, pressure, tools, nurturing, many, many different aspects.
Thanks very much for that, Elizabeth. And maybe, Edwige, would you like to respond? Maybe give us a perspective on how supervisory pressure might also help in some ways in terms of bringing this issue higher up on the agenda of management boards and teams.
Yes, sure. And I would like to broaden the discussion a bit more, because we heard from Carmine, obviously, when you have diverse teams, companies are more profitable, you have better risk management. Elizabeth says it's absolutely crucial with supervisory look that you have the best people on boards. But I think more general, with the 40 years that I experienced, the role of the board and the management level has changed, and the world around us has changed as well. So we have increasing complexity, uncertainty, you have conflicting interests. And when I started in the bank, and it's exactly what Elizabeth was saying, when I started in the bank, you had an all-male board. It was just rubber stamping. So actually, there was not much discussion there. They were all like-minded. It was just an enjoyable meeting, and they just rubber-stamped what was presented by the executive committee. That would no longer be possible. And so it not only means that you need the best people on board, but you need to change the board dynamics. And so it means that the board needs to be much more accountable. And not only do you need that diversity, but you need excellent chair leadership to actually lead this diversity and to include people around the board. And then comes in what Elizabeth and Carmine were saying, and that's culture. If you have a culture of like-mindedness, old boys club, people that know each other, that had been at the same schools, that come from the same kind of nationality, that are perhaps very power-oriented or very oriented on an up or out, you will, by essence, exclude women. You will, by essence, make it more complicated to join the club. So actually, we really have a common interest between supervisory agencies that we have in the room and companies. We need more diversity to address the complexity that we have to face. We are much more accountable than before. And so not only do we need to be more intentional in who we get onto that board, how we make sure that talent is preserved, but then you need excellent leadership to make sure that each voice is heard, that you allow for robust debate, and that you actually create a culture that will use those talent. And I would also like to give a nice example. BNP Paribas, I was working there a couple of years, and they told me that when they intentionally were looking for more women in their board, they noticed that the women had much more questions in advance. They wanted to know, they had to expand their onboarding conversations, because those women wanted to know much more what was happening before accepting the post. They were raising much more questions. We know from research that women that start in a board have a better education, follow directors' programs, so they set the bar for themselves, as Elizabeth said, much higher. So unlike everything that you would hear, women are not available, they don't have the ambition, they are not educated, that's all wrong. In practice, it's much more the inward-looking boards actually the fact that networks have been looking for like-minded people, that is actually what is preventing women to enter. And we need diversity. And we know from the data that countries that have taken actions, that they saw spectacular increase in number of women at board level.
Super, thank you. So I'd like to stick. I'm really enjoying this interaction between supervised and supervisor. But I promise, Camille, I'll come back to you for the big picture towards the end of our conversation. So, but back to you, Elizabeth. Could you tell us a little bit more about sort of the ECB itself and the efforts that you are taking to increase diversity in ECB banking supervision? I would note that sort of, it's great you have the escalation ladder for the supervised institutions, but there's no escalation ladder for the ECB. So how do you sort of make sure that you pursue the most ambitious goals possible?
Yeah, I mean, I have a catchphrase you guys will all recognize, I think, which is those in glass houses shouldn't throw stones. Right. So we should be practicing what we preach. And so, of course, we have put gender targets in place for the ECB. It's been a real focus of ours to try to meet these targets, not only on an overall basis, and they've been in place for some time, but also at various levels of management. So, the other adage I think we try to live by is if you can measure it, you can manage it. So tracking how you're doing, I think, is an important component. On an overall basis, the workforce has 46% women, and we as I said, we've been very focused on this, but we have issues. There have been continuous improvements, but we still identify areas for progress. And when you look at the senior management level, we're at about 38%, for example, but all management, including the levels just below the topmost management, we're at, on an overall basis, 34%. We do better on the lower level statistics, 51% at the lowest level, 45%, 40% as you move up the ladder of promotion ladder. There's an issue that we've identified, and I made reference to it when I told my little anecdotal story about my experience entering the banking industry when I did. We're finding that having women be represented in the pipeline, even at the lowest levels, is difficult. We are not getting applications. And the way the ECB is set up is we start with a traineeship. That's, for an early in career individual to join us, and they join for a set period of time. It's around 2 to 3 years, something like this. It varies depending on the traineeship. Some of them are shorter, 18 months. But after that period of time, then you might compete to be a permanent employee. And, trainees that people who have served as a trainee definitely have a leg up on the application process. They're known, they have a track record. It's always open to the whole outside world. But I would say that the trainees, have an ability to be hired that is at a higher percentage chance than just coming in from the outside market. But the trainee data, this worries me a lot, that we're having not a lot of applications from women on the front line of this. And so that rat in the snake, if your traineeships are filled with more male representation than female representation, and if you do a large part of your hiring from the pool that served as a trainee, well, you're looking at gender imbalance 15, 20 years from now that'll continue unless there's, as career paths continue on, unless you, open up and hire from the market. This is not for lack of trying. There's a phenomenon here that, is very interesting. We've thought about the position descriptions. We've been very intentional about the problem that I raised with you of writing position descriptions that are more broad-based. We've been sending women out to the universities to recruit people. We've been very focused on the kind of work-life balance, well-being components that we have, what is offered in working arrangements for teleworking, for childcare, what kind of parental leave is there, what kind of non-paid parental leave can be added on that. We're incredibly generous. I can tell you, I've worked in a couple of places, just as Hedvika has. The ECB is a fantastic place to work when you look at all of these components. So I think, we're bearing down on strategic communication. We're doing a tremendous amount of work on engagement initiatives. We've got to really muscle it quite a bit and, encourage the women to apply. I can tell you that, even on the traineeships have gone out and encouraged people to apply, but more when they've been in the role and promotion opportunities are opening up. I've gotten on the phone with eligible, the entire eligible group, and just I can't pass a judgment on their their likelihood to succeed. I wouldn't represent myself that way. That would be inappropriate. But just encouraging them to apply and at least have that experience, because it'll train you for down the road. And don't put yourself out of the competition because you have read the vacancy notice too narrowly. I think a lot of us are doing efforts like that, and I think more has to be done.
That's really helpful, Elizabeth. Thank you for that. Carmina, is there anything that you'd like to share from your organisation, any experiences sort of that our audience might find helpful today? And speaking of the audience, quick reminder to everyone: feel free to enter questions into the chat. I as a journalist, I'm glad to have this monopoly of being able to ask questions, but jump in, and maybe there are questions I can put from you at the end of toward the end of our conversation. But put them in now, later. Over to you, Carmina. Was there anything you would like to add on the OECD?
Just maybe one point, OECD, I have to say that, obviously, as also Elizabeth was saying, we always hope to have a broad range of candidates for all positions. In some cases, it's not like that. So we try to have as diverse as possible, including gender diversity, but then we get results in terms of the top positions. So let's talk about these. Basically, there are 50% if you're in these deputy secretary general, the broader top management, the head, the directors. So I'm a male, but so this is balanced. Also in my directorate, we have quite improved situation and quite gender balanced. But I have to say, just as a comment also to before, that then you don't solve the problem of gender discrimination with board members, where actually there is the only area where we have the data. So the problem is all the other areas. If you see the supply chain is small companies providing in the mines and the other things. So this is an issue. But then honestly, how to tackle, and this goes again, Elizabeth, this was a very good point. I have 3 kids, 2 daughters. I'm a minority in the family with my wife also. And but then, the second one is studying mechanical engineering in Turin, Polytechnic. But this is, it's not so common there. So she feels a bit underrepresented. She feels this. So I think we really need to work really from the beginning. And then again, trying to have, going to school. So having really making clear that everything can be done by all genders, obviously with important packages that also Elizabeth was mentioning, also at the OECD, flexibility work within some cases also I think is very important for also convince candidates also to move, for example, to international institution. And then this maybe leads, if I have 1 minute also to an issue we work a lot on, gender diversity means also to tackle financial independence issues. And typically there is less financial independence for women, but this must be tackled again also from the beginning. We work a lot, as many of you may know, on financial education, financial literacy. We have, this is an important issue. We have, again, peers and apples, some data there. You may know the PISA test all over the world by the OECD. We do also the one on financial literacy. But in some cases, results, we just published the latest edition. Results are interesting. In many countries, there is no significant statistical difference in gender, performance driven by gender. In some countries, actually, I have to say, girls much outperform boys in Malaysia, Norway, United Arab Emirates, and Bulgaria. Maybe it's while they critically boys outperform girls, for example, in Italy and Italy, Austria, Denmark, Portugal. So this is, I think, important because these. From the beginning, you need to have the possibility to have less discrimination. We have an important recommendation, which is for all countries. Again, we cover not only, let's say, the traditional EU one. So, and I think that's why I was invited here. So we emphasize, these gender sensitive, financial literacy efforts. And this goes really directly with countries to integrate gender into national financial literacy strategies. We did it also recently with Germany. And we monitor, because our recommendation on financial literacy actually really cares about the gender diversity issue. And, and also it's interesting, maybe because there are different starting situations, that really literacy program, financial literacy program targeted at women, they really have a positive impact on their economic stability, increase their representation in finance-related fields. Again, is a point that in part Elizabeth was saying, including in supervisors. Okay, and so for financial sector, I think promoting financial literacy at all levels is really essential to building a diverse future workforce and ensuring resilience across generations. Then obviously we shouldn't end up in the opposite way and discriminating men, but maybe this is for next year or in 10 years a panel. Okay.
Okay, a whole other conference topic there. So we do have a question from the audience already, and no, I was going to save these for the end, but the EBA is a dynamic place and it's rubbing off on me, so I'll jump in here with a question from an audience member. It really dovetails with some of the comments that you've all been making about universities. And so the audience member's question is, the lack of gender diversity in the financial sector may also be due to the lack of women doing finance and engineering ICT studies, but also due to the lack of initiative males that would allow women to grow more on their career path. What do you think? And so would anyone like to jump in either with examples that they've seen at institutions or at their own institution that sort of might speak to this audience member's question?
Yeah, maybe I start because, first of all, Carmina is right. The education component, I think it's too late if we're already talking about the folks who are in the door to be in the most effective way possible managing diversity. It has to start at the education component. There's a lot of research behind that. I know Bloomberg Philanthropies has done a tremendous amount of work on improving diversity, and the learning from that has been about the education component, that even in elementary school, it's already too late by university, in elementary school, that the tracks that young women are being encouraged to take, that this has to be a focus. So and we are with a public institution, so we think about those things quite a bit. So the ECB realized, for example, in the field of monetary policy and economics, that there was a real lack of women-trained economists. So it addressed this by putting a scholarship in place for women to apply to receive from the ECB to advance their studies in economics. And as part of that, they come in, they work at the ECB for a period of time, they work on their thesis, they receive mentors. I've been a mentor, I am a mentor in this area. But we pushed from the supervisory side, well, why don't we have a women scholarship program also for finance and statistics and these areas? And the scholarship was based on the statistical data that showed there was a lack of female representation in the discipline in economics. It's not true in finance. The women are getting the finance degrees, so there's not a need to push with an application. And the part of the question was also about, males and their role in this. I would flip it around a little bit from the negative to really the positive. One thing that we really know is that male allies are enormously important throughout the education component, early in the career, as mentors. It's a fundamental that helps women advance in their career. And thankfully, we have plenty of male allies at the ECB, and I've seen them in the course of my life in various walks of my own career, and I owe my career to them. So this shouldn't be seen as the women instead of the men. And I think we really have to be cognizant of that, because there is a group of men that are feeling disenfranchised, and that has to be addressed. We can't have half the population feeling disenfranchised because the other half of the population is looking to move ahead. We've got to do this together in a fair way.
Thanks very much, Elizabeth, and also for the shout out to Bloomberg Philanthropies. I'm going to have to ask you an even harder question later to balance it out again. Edwige, would you like to build on this either in terms of the pipeline discussion here or in terms of the allyship? Is there anything you'd like to add on that point?
Yes, so I will first answer the question of education, because that's something that has been put forward for so many decades. Women don't have the right education. They are not much this, they are not enough that. We know from the OECD figures, indeed, Carmine, that now in all countries worldwide, women are higher educated than men, especially the youngest cohort. So we actually face the opposite problem, that when you look at the youngsters, the Gen Z, it's actually more easy for young women to educate and they have a higher education, and you have a problem now with young men dropping out of school with a system that apparently is not appropriate for young men. So first of all, education is the wrong reason. Women have the right education, are higher educated. We should rather see what is happening in the education system that will disenfranchise young men, because if they feel excluded, we will face huge problems in society. So, and it is true, if you look at ICT, if you look now at AI, generative AI, this attracts more men, that's true, but it also attracts a kind of personality, a kind of characteristic that sometimes is not the best characteristic to be in a board or an executive committee. What you need at an executive committee level are people that are highly skilled, that are able to look at things from different perspectives. So yes, you need AI knowledge. Yes, you need ICT knowledge, but you need people that can do more than that. And there comes in a broader talent, and that is where I would say, just like Elizabeth has been saying, and yourself, if you say, I only want ICT experts, you need expertise. The question is whether you need only this kind of knowledge and background. And so I think that education is not really a problem, but we should look at the OECD statistics to see how we can make that happen for the future. Then in terms of attracting young talent and the male allies, it's true, male allyship is extremely important. And I cannot convince more than that we have to make it an inclusive story. It's not about you and me. It's not about us and them. Men are still 2/3 of the population at executive committee level. They are not asked whether they have the right degree, whether they are doing the right job, whether they are the best. We ask those questions to the 1/3 that is coming in, and that is the female. So yes, we need male allies. We need to make it a win-win story. We need to make it a story of growth, of relevance, of staying competitive tomorrow, both from the supervisory aspect and from the company level. So yes, male allies, and that means that we change the culture. We change the culture in terms of it is not only the competition where it's you and me. No, it's about creating a team that as a team is responsible to meet expectations from an organization or from a supervisory body.
No, just one thing. Obviously, you have to put together two data, Edwige. Not the flow now, but the average age of board today. And obviously, the average age of board today is not 22 years old. So the people that are studying now. And also the skills that in today's board. So we are working flows, and in any case we need, and as you correctly suggested, actually, they are keep on changing. So what was studied 10 or 20 years ago maybe is not right for the board now. So we need to combine the two things. That's why we have to work on all sides and across the line. And by the way, remember that is not only for board, but is a much, much broader issue. Thank you.
Mind if I add one thing?
Please go
One
ahead.
thing just to Carmina, because I should have said this before, but both Hedvig and Carmina are sparking a thought. I know there was the discussion about the the impact on profitability. I mean, this is not, just a social policy in any way that we're trying to promote through the supervision at the ECB. There is very detailed research that shows not only about the profitability of institutions, but also that gender diversity on corporate boards significantly enhances the governance quality. It supports sustainable practices, and it strengthens the risk management of the bank. There's a dynamic change that takes place if there is a more diverse board, and we're promoting that because we want to have more sustainable business models, stronger risk management, healthy, resilient institutions in Europe. And one of the ways to have that is through having diverse boards. And I really appreciate the age comment. You heard me mention it before. That is a factor, if we've got, and we do have in Europe, some of these boards where the average age is very high 60s, and that average is not because there's a wide range. That's not an institution that's going to be making the best decisions. It needs diversity at that table with respect to how the market is changing and have new information there.
That's really helpful, and I'm loving the fact that you're all jumping in and we can have a real discussion here. But maybe we could build on the comments from Carmina and Elizabeth just now. I mean, so this is a natural sort of evolution. I mean, sort of the composition of boards will change by aging as people get older. But to what degree should the industry be signing up to making voluntary commitments in terms of saying, hey, we pledge to have greater diversity on our boards, and what metrics could be followed there? Or maybe you have a different opinion. Maybe commitments are something for individual firms to make rather than the industry as a whole.
Yes, absolutely. And I have a fun story to share. When we did research last year on a couple of statistics at board level across Europe, we noted that the average age of men in the board was higher than women. You see a rejuvenation, a renewal. So the incoming women are younger, are very well educated, and it's actually men staying for so long. You have men staying for 20 years in the board, and they prevent actually other men to come in. So the turnover amongst men is too little. So that's also a very fun story to tell. What I can also say is that Europe has taken decisive action. So all stock listed companies will need to have 40% women at non-executive level by mid-2026. So that's really 1.5 years from now. Not only do they need to have 40%, they can choose for executive and non-executive, but then it's a much larger pool. Anyhow, every company will need to set an objective for executive level too. And some countries in Europe have taken the decision to broaden that objective to all executive committees. So that's the case in France. They are moving to 40% at executive level, and Spain has taken the same choice. What you see in those countries, by magic, when you set an objective, guess what? Companies find the women, find excellent women, and meet the objectives. That's how it works in life. Banks do not just change because they like to change. They change because they have incentives either coming from the outside, either from within. So setting objectives is the best possible way for change that we have seen across Europe. Some countries are still below 10. Countries that have taken measures are far beyond 40%. There is no reason to believe that Estonia has no educated women. They have the highest education in Europe. And still, by chance, poor chance, they are below 10%. That is going to change thanks to European directive.
If I could come in right behind that, just to say, we're really proud of how we've been increasing our intensity of supervision and our intrusiveness on this area, with 11 institutions subject to detailed assessment carried out by the ECB with regards to the fit and proper appointments in 2024, and 7 binding decisions, including recommendations for remediation of the identified shortcomings in institutions, moving them up the escalation ladder. The fact is that at the ECB, the FAP decisions can only impose non-binding and ancillary provisions on the banks with respect to the gender diversity. We don't have the authority to impose binding decisions there. So I think Hedvig will make you very happy to hear this. You know, we posit that it's much more probable that the Women on Boards Directive was more impactful in the changes that we've seen and the increases that we've seen, that slow but steady progress, than the steps that we've taken. We're proud of the steps that we're taking, but we think that the requirement that there be compliance by mid-2026 for every stock-listed company within the European Union to have at least 40% female non-executive directors, you know, that's much more likely to have moved the needle in this regard.
Elizabeth, you scooped me on my question about sort of the escalation ladder, but okay, well that's great because it saves us some time. But we have a question, or it's kind of maybe also a statement coming in from an audience member, saying thank you for this interesting conversation. I think another thing that may also help facilitate women's durable and sustainable participation in the workforce is to equalize the maternity and paternity leave. Right now, the responsibility and duration falls more on the material side, and often hinders or stagnates the career growth of women in comparison to their male peers in a negative manner. If we want to facilitate women returning to work, we need to spread the responsibilities at home equally too. And maybe, Carmina, could you give us, is there anything from the OECD that would help sort of illustrate this or to back it up that you would like to refer to in terms of returning to work and maternity leave and paternity leave?
Yeah, I tell you, I mean, that, for example, I have my senior counselor that I was so happy that he got a paternity leave. So it's quite normal now. It's become here in this organization to have also paternity leave. And there is no, I would say, not even no disincentive from the organization side, but also there is no problem in asking. And I have to tell you, my point of view, I'm really happy when it happens, because it really means that you, again, spread that, because this is important. It's a responsibility of everyone to upbringing a child, a family. So I think we have very clear rules, much, flexibility. And then again, already very much, applied. And again, even in my team. So I'm very happy on that. Maybe now, if I can, just one thing, because in Italy was the first country to put quota, mandatory quota in the law for the board of listed companies and then for state-owned enterprise, and actually now it's been put to 40%. I think honestly, again, sometimes it's not necessarily the best way. There were other tries, recommendation, but then it doesn't work. So I think that sometimes you need a structural break. Obviously, this has worked because it's mandatory. So the board now at 40%. As also Elizabeth, but also, all of us, Vijay was saying, is that we have seen also this improvement, lowering the age. We have a system with slate voting. Some of you may know, minority members, board members elected by minority shareholders. So we have seen in Italy, so now is my previous experiences, a great change in board composition, age, all diversities that has improved that. But also, I remember in one of my previous experiences, we were trying to do we were doing with institutional investors a lot of induction sessions. So preparing new board members, potentially women, and many were women, to be ready. And then I have to say that often these kind of people were then the ones selected for being board members. We had, unfortunately, sometimes unintended consequences. We had excellent supervisory board composed of all women, and unfortunately, then they had to leave because obviously gender diversity is in all senses. But I think the system has really worked.
Carmina, thanks very much for that. I'm normally Francois, Louis, and Elizabeth are probably used to being the bad cops. I'm the bad cop today, and they're the good cops. So I have to end our conversation here, I'm afraid, because we have to move on to our next panel. But thank you all so much for joining the conversation today. This was great, and also for the interactions. It was really welcome. Feel free to stick around to the panelists to listen to our next panel. The next panel being on looking beyond the EU, as Francois Louis said at the outset. We are not so focused on Europe this time. We want to get a wider perspective. and see some other opinions. And I'm really happy that joining us for this panel is Andrea Meschler, who is Deputy General Manager at the Bank for International Settlements, Sweta Saxena, Director at the Gender, Poverty and Social Policy Division at the UN Economic Commission for Africa, and Sam Woods, Deputy Governor for Prudential Regulation at the Bank of England. However, Sam sadly is not able to join us in person or live, at least on the call today. So we have a video interview that I conducted with Sam a few days ago, which our colleagues here at the EBA will run in just a moment. So, but a quick message to Andrea and Sweta: stay tuned for our discussion starting in a few minutes. Thank you.
Okay, so thank you, Sam. Maybe you could tell us a little bit more about the Bank of England's view on the benefits of a more diverse workforce, ideally one with gender parity, both within your institution, but also within the financial firms that the PRA supervises.
Great, thank you, Nicholas, and hi everyone. Very sorry that I can't be with you there in person today for diary reasons, but did want to say a big thank you to Francois Louis, Jose Manuel and the team for including us, because the ESAs are our beloved brethren, indeed our sorority across the channel, and we miss you very much. So thanks for including us. Coming to your question, Nicholas, we've actually had to articulate this recently in a regulatory sense, because we've got some proposals out there for promoting diversity and inclusion. And in that context, we've been very focused, and we've really only gone to two things. The first one is the benefit in terms of accessing all the range of talent that we have here in the UK of this sort of an agenda. We've done that quite lightly, by the way, in our regulatory mode, because we think that's a bit more for the market, but internally that's much more our motivation. But then the second reason that we have actually majored on quite a lot, and this is quite specific to us, is that we do have a reasonable amount of evidence that a lack of diversity and inclusiveness in a workforce can lead to a high risk of groupthink. And because we're interested in safety and soundness, we know there can be a linkage between groupthink and financial disasters of various kinds. So in a regulatory sense, we've been very careful to stay on that. And we say that is our premise. Obviously, a very important part of that is gender.
Okay, and what has the Bank of England specifically been doing to increase the share of women at all levels within its own institution?
Well, Nicholas, I'm glad you said at all levels, because it's a bit of a mixed picture, but it's not perhaps the mixed picture that people would assume. So actually at the top of the organisation at the moment, we're in a reasonable shape in that we have only 4 deputy governors, which is admittedly still quite a lot. But of the 4 deputy governors, currently 2 are men and 2 are women. But that's a small number, so that can vary through time. That wasn't true even a year ago. But the next group down is our executive directors, of whom there are around 30. There are actually more women in that layer than there are men at the moment. But what I notice is, and I've noticed this throughout my time in this job, and I have failed to improve it, rather to my annoyance, is that we do have a persistent drop-off in the gender mix of about a 5 or 10 point drop-off at a sort of middle management layer. That is quite common in organizations, but I have found that very, very difficult to do anything about. Now, what we have been doing, I hope has also made some difference. But interestingly, what happens in our organization is after the middle management layer, then it comes back in at the more senior layers. So I don't know if that's normal, but that's at least been the experience. Things we've been doing, I mean, obviously we've done lots of different things, but let me just pick out the ones that have been interesting. One, we've got a thing which is called our Career Returners program. Probably some of you have that as well. That's been great, really great for us in all sorts of ways, actually. We have worked quite hard on our job descriptions, because we did discover that the way we were describing jobs unintentionally had a kind of gender bias in it. It wasn't, visible in a crude way, but it was actually visible in how people reacted to the ad. So we've changed that, and that's been quite helpful. We put a lot of effort, and this comes down to a recruiting manager when recruiting, particularly for promotions, making sure that we've got a field that is diverse, particularly across gender and in other respects too. We have been, I think, pretty good on flexible working. It's interesting because that appeals to all of our workforce, actually. It's not something which is specific to one gender, but it is the case that our female staff raise that issue more strongly even now than our male staff. And that's changing, I guess, through time, but for the moment, it's very important. I feel quite good about that. The one bit that we really haven't quite got right yet is we do have quite a generous and now gender neutral parental leave allowance here at the bank, which is great, but we're still not that good at the process when people come back in off parental leave. And we had a review of this recently, and that was the one thing that came up, was that surely we can do better on that.
Well, that brings me to my last point then, Sam. You've spoken to the level of the middle management. You've spoken to some areas of improvement there that you'd like to see. But what would be the key deliverables that you'd like to be able to achieve in the coming years? And the next time that you speak at an EBA conference, what would the progress be that you'd like to be able to report on this?
Well, look, I thought the best way to answer that question would be to tell you, what's happening in UK financial services on gender mix, which is kind of interesting, actually. So if you look at it at board level for UK financial services firms, the percentage of board members who are female today is 37%. That's obviously a long way south of parity, which is what we want to aim for, but it is up from 23% since 2018. So that has been moving quite fast. And in the last year, I was looking also at the flow rate. It's interesting. 58% of the appointments to the boards of the financial services firms in the UK were women. And I know from my own interactions with firms, because obviously I'm often talking to chairs about what they're doing with board composition, it is a very front of mind consideration. Now, all of that, by the way, I say this with some chagrin as a regulator, that's been private sector led. That's, we've encouraged it, of course. And of course, as we all know, we've got bits of regulation which speak in that way, which we've inherited from our membership of the EU. But actually, if I'm honest, that's been a private sector drive. But if I look at some other sort of cuts on it, we've got figures for the top three roles. So that's CEO, chair, and CFO. And the percentage of those roles, which is currently filled by women in the UK, is only 21%. So that's really quite a lot lower. So clearly, some of the non-exec appointments are covering a bit of the gap, and I think it's quite useful to pull out those kind of key roles to see what that looks like. Interestingly, though, if you look at the top 20, so that would be chair, CEO, CFO, and then the next most senior people, which would be the executive committee and maybe a few others, that percentage is 39%. So maybe the pipeline is looking a bit better, or maybe it's been that way for a long time. I haven't had a chance to look backwards, but there's a gap between the 39% in that sort of overall there and the 21% at the top. And I must say, I recognize that gap. I was in a meeting with actually 80 chief executives yesterday, and it was overwhelmingly male. So that is still an area where things have not moved as much. And we do, of course, have something here in the UK, which is our current Chancellor, which is our Minister of Finance, is a woman. But it's a remarkable fact that she is the first woman to inhabit that role. We've had many women prime ministers, so perhaps many is too strong. We've had several anyway in quite recent times and further back. So it does make me think, when I look at this, and I look at the much larger gender pay gap we have in financial services, which is just shy of 24%, whereas the average across the country is about 12%. That there's more work, I think, to do on this in financial services than in some other areas. I think that is a fair comment. And I guess if I'm lucky enough to be invited back, despite having been so spectacularly boring today, Nicholas, it is early in the morning, to be fair, when we're recording this, I would love to come back and be able to tell you that each of those numbers had moved up in a material way.
Well, I certainly didn't find it boring. Thanks very much, Sam, for the interview and your time.
Thank you, Nicholas. Thanks, everyone. Have a great day. Thanks.
Okay, my thanks to Sam Woods for that. And Brexit was a few years ago, but I'm sure that everyone in the audience will feel that sort of the Bank of England doesn't feel quite so far away, at least when you're talking with Sam Woods. So from a European perspective, but let's move on with our panel. And my first question goes to Shweta. So for a bit of historical context. So we are nearing the 30th anniversary of the UN World Conference on Women in Beijing. For those of us who don't remember, it was a real turning point because the resulting declarations are kind of considered by some to be an international bill of rights for women of sorts. So there's just been a review of the declaration, and maybe Sweta, you could open this panel up by telling us where does the world stand as we approach this this anniversary.
Sure. Thank you so much, Nicholas. And first, thanks so much, Francois-Louis, for inviting me to this panel. It's wonderful to be here. So talking about this Beijing platform for action. So just to give everybody a little bit of a background, back in 1995, 189 world leaders met for what was basically the fourth World Conference on Women. And they adopted this something called Beijing Declaration and Platform for Action. What was it? It was about gender equality. And, it was more aspirational. Like, they said that we need to achieve gender equality in 12 critical areas. And I'll get to what those critical areas were. But there was no sort of deadline by when they wanted to do it. It was just aspirational. We need to achieve this. And then on top of that, they didn't have any kind of indicators or something that they were following to measure it. However, ever since, they've been meeting every 5 years to see how much they've progressed. So as Nicholas said, I mean, 1995, next year marks 30 years since this Beijing Declaration Platform for Action was adopted. So every 5 years we do a review. This year, we just completed one for Africa. And I'll give you a little bit of a sense of what we found actually in that review. So these reviews are done in these 12 critical areas. And since the Agenda 2030 came in being actually in 2015, if you know about that. These are the Sustainable Development Goals. So we've tried to arrange all these 12 critical areas around 6 clusters, as we call them. And just to give you a sense what these 6 clusters are. So these 17 Sustainable Development Goals, we tend to say that they're summarized along the 5 Ps, people, planet, prosperity, partnership, peace, and so these are the 5 Ps. So along those, if you match these 12 critical areas, what we want to achieve gender equality is in poverty along people dimension. It's about poverty eradication, social protection, social services, around dignity, freedom from violence, stigma, and stereotypes. Around prosperity, inclusive development, shared prosperity, decent work. Around partnerships, accountability, participation, and gender responsive institutions. When we think of peace, it's about peaceful and inclusive societies. And lastly, about planet, it's about environmental conservation, climate action, and resilience building. So every 5 years, all regional commissions in the United Nations, we have 5 regional commissions for 5 different areas: Asia Pacific, Europe, Latin America, and Caribbean, Africa, and Western Asia, as we call it, which includes the Middle East. So for Africa, what we do this review in partnership with UN Women. And what we tend to do, we send a questionnaire to our member states, and along with that, they also do a review of how far they have progressed. So in this current review that we just ended on 8th of November with the ministerial meeting, we have 54 member states, 39 had submitted their reports about how much they've progressed. And so the key finding was, of course, as you would think, we have made some strides, but of course in promoting, but not a single country is in a position to say that they have achieved so far, or they will be able to achieve in the next decade or so. The recently released, we also have an Africa Gender Index from last year's, which shows that Africa is only halfway to closing the gender gaps. And these gender gaps we measure in terms of economic, social, and political dimensions. Interestingly enough, I was asking my colleagues, so how long would it take? And if you look at any gender gap studies, they would tell you that it'll take centuries. So according to this index, although we had only 2 or 3 data points, but it says that it's going to take us 220 years to close the gender gaps, which is too long for anybody to bear. But some progress has been made. Some progress has been made in health, in education, but a lot needs to be still done in terms of reducing gender-based violence. We have economic disparities and also limited political participation and representation. So just to give you a sense, in political participation, we have in Africa about 25% in parliaments, although the goal is about 30%. only 2 countries have about gender parity, I think Rwanda and one more country. But in terms of health, there has been improvement. Maternal mortality has gone down, but of course, it is still way above the target of 70 deaths per 100,000 live births. So, as you can see, education, yes, there has been parity in enrollment, but of course, opportunities to women are still limited compared to men. So these are some of the things where we feel that more needs to be done. Some of the things that came across, it's not the dearth of laws, that countries have. It's the implementation of those laws. So that's a big problem we have. There are lots of cultural and stereotypical cultural biases, stereotypes that different countries have about what women can do and cannot do. Those also prevent women from actually achieving their full potential. They are not allowed to be actually financial inclusion is again one aspect where women are not allowed to actually open bank accounts and stuff like that, due to many, again, related to their cultural and cultural biases and stereotypes. So these are some of the things we need to fight. And there, we can talk a little bit more about some of these things later on. But one of the biggest things that comes out, and I think it's been talked about in the previous one, what you can't measure, you can't change. So there's a lot of dearth of data, which is the gender disaggregated data. And unless and until we have that, we are not able to implement policies that would lead to gender equality. I leave it at that. I mean, like, there's so many other things I can talk about right now, but if it gives you a little sense, Nicola?
That's very helpful. Thanks very much. And you've really created a great segue to my question for Andrea, both in terms of data and in terms of gender gaps. So on a specific gender gap, though, Andrea, what about the gender pay gap? I mean, if we can get to grips with the problem in terms of data, then we can analyze it and we can see what the problem is and where the path forward is. Maybe you could tell us a bit more about the gender pay gap and inclusion, the data, the impact, and the perspective from the BIS. Thank you. However, Andrea, I'm afraid we can't hear you, Andrea.
Can you hear me now?
Loud and clear.
All right. So I just was saying it's a great pleasure for me to be here. And I also listened with great interest and pleasure the previous panel. So thank you very much. So what I will talk, it is outside of Europe, but it's from the Bank of International Settlement perspective. We're a global financial institution. And definitely faced with many of the questions that were raised, questions, challenges, and also opportunities that were raised earlier. So you mentioned a gender pay gap. So that's so absolutely. And we're a house of economists and data hungry people. So we do regularly a gender pay gap analysis that we conduct. It's conducted, of course, externally, and we give them all the data. And it's been very interesting. First of all, I think it's very important, but it is only a piece of data, and we need to go much further with it. So for me, it's the first piece, like it's a very preliminary piece, and it needs to be right. And then from there, much needs to happen. What am I saying? So we did one, and well, actually, it's the second one, and the scores had improved. The point is from a very high level, and this will show. This is what I'm saying about you need to get there, and then you need to do much more. So our pay gap. If I look at the data, what we saw is that on average, so this is for the institution as a whole, BIS, so women at the BIS earn approximately 23% less than men. So you could, no, it's not, because this is not the right way of looking at the number, right? The right way is you have to account for the grade, for basically the grade at which they work. And once you account for these factors, right, to really make sure you compare position with position, then we were with flying colors. So in fact, even performance, performance was not even that big of a, like if you take the performance, it's not very much that big. But once you take out, so the structured factors, then the people who work in the similar position get paid the same way. And that is absolutely important. And we will continue to do those, and we look through all of our position. It's also a good time to assess, make sure that we have the assessment, and that different positions that are graded the same way across the institution are really seen in the similar way. So for us, it was a very important piece. The reason I'm saying it's only the beginning is because it doesn't answer all the questions, right? The question is why ultimately fewer women are, the women are not in the same position as men. And I think so it's important that the people who do the same jobs get paid the same thing. It's not just important, it's essential. But then you have the question, how do we make sure that women get to do the same jobs, i.e. have the same, populate the institution at the same level. So that brings me to the whole, how do you bring diversity and inclusion in the institution? And the BIS has been doing tremendous work, and I'm very proud of that. For the last 5 years, they had a target. They put in I say they, I wasn't there yet, but I benefit from the outcome of that in 2021, I believe 2020. They put an explicit target. It's a medium-term target, of course, but very ambitious, about all new hires at the professional level, line managers / senior professional, should be ideally women, so 50%. And that has really transformed the institution in a very positive way. It has made us think about what do we need to get there. And you can really, talking about data-based, you can really monitor, look what we're doing, have the discussion, and it is a journey. So it's a target, so the medium-term target, we're not quite there yet. We're more around, so if you look at different levels, as you all know, once you talk about data, there's a lot of different, how do you define what the target group, etc. We're more around, just around 40% of getting there. Just below 40% depends, or a little bit above depending on the grade. So, but this is exactly that group that you need, that hard to get grouped. So not on the very top, and I will get there. We've done tremendous effort, but that just below, that upper middle. And in my view, that's the right way of focusing. That's the right focus. And it's really exciting to be able to get there and to have the conversation. How do we get there? I'll stop here, and of course, happy to answer more questions on that topic.
That's super, Andrea. I mean, that really speaks to some of the conversations we were having up until now in the conference about sort of like mobility within the organization, but also, measuring and having the data to look at it. Unless there are any other KPIs you'd like to refer to, Andrea, I would pass over to Sweta to give her perspective on within your own organization, what KPIs you look at, and and the progress you're making along that way. So I'll take that as you, Sweta.
Sure. Thanks, Nick, actually. So at UN, we've been doing it for a while now, especially when the current Secretary General, he came, at that time people said that it should have been a woman, and he said, it's okay, I'm a guy, but I'm actually going to make sure that we bring women up. So he's been very, very strong proponent of promoting women and having these targets for women. At one point in time, just to give you a sense, we have 5 regional commissions, and all the heads of all the 5 regional commissions were women at one point in time. Some went away, and new ones have come in, and I think now we have 3 out of 5. Anyways, so we do have targets for 50% females at all levels, by the way, not just at the top level, and we get regular updates from our HR about where we are. I think on average we are 50 or more, by the way, and especially at professional level we are, but it depends on sometimes which level we are talking about. So at the director level and higher level, we are 50%. Having said that, it's only the one below, which is sort of like the middle level, where we keep fluctuating. The target given is 50%, but 50 is the center. So we say that anywhere from 47% to 53% is what we target. And at that level, the P5 level, which is the managerial level, the starting managerial level, it's a little bit sensitive because one woman leaves and then all of a sudden the target comes down. So that's where we are trying to actually have a lot of our focus on that level. But different. On average, we are about 50% at least at ECA, where I work, the Economic Commission for Africa. Some divisions tend to have more representation than compared to female representations compared to others. And sometimes you could also think about it's maybe the subject that it is about. So just to give you a sense, in my division, which is Gender, Poverty and Social Policy Divisions with a Social Development Division, it has 65% females compared to security and, security services, where they're only 15% or 20%, right? So it's imaginable. That's why an average is what I'm talking about. We are quite there. But there are lots of efforts that the HR also tries to make when we are trying to encourage. So just in the application, it was, the last panel was quite interesting, I have to say, Nick. I thought Dave said everything that maybe Andrea and I may have to say. Andrea may have a little bit more to say. At the recruitment level, we try to encourage a lot of female applicants. And what the HR tends to do, if we don't have 30% female applications, they advise us to kind of extend the duration for the job opening to stay open. And also there is a lot of effort by the HR to send, to encourage female candidates to apply also for positions. So these are some of the things that we've been doing here. And I think we are pretty much there. Thanks.
So Nick,
so go ahead, Andrea, please jump.
Yeah, let me, because I'm happy to add some things to Sweta, because she really laid the basis very nicely. And I think she really, and it also chimes in with what we heard this morning. I think this effort, the clear effort, not just the effort because we need to have it, is at the board level or at the really top part echelon of the institution is getting there. We've done tremendous improvement. That's where it's also easier to have the visibility. It's also where you can tap into women. You can approach them, for head of departments, members of the committees. Look, the talent is there. Where it is a little bit more difficult is just below that, right? It's the line managers, senior line managers. And I also think it's a matter of numbers. There are more of them. And you need, and to me, that's what we have seen. A critical point is what we call direct sourcing, is how do you make sure the selection pool, the initial pool of interviewees has enough women. And often, so at the very top level, you can do it yourself, you can call, but at the lower level, right, it needs to be done. And so sometimes external help helps to just make sure you have that network. So for us also going forward, that's a big lesson learned, is to make sure that pool has sufficient women. Because what we see, we monitor the pool of interviewees, then we look at how many are called for an interview, how many are actually offered something, and how many ultimately accept. And it's very interesting. And my reading of the data is, as long as we have enough women in the initial pool, we're fine. So that is really but it is hard work, right? And at the time where many institutions are budget constrained, or resource time constrained, people are running around because we all have lots to do. I think that is something really important. The other thing I just want to two things, and I'll just throw them out here, and we'll see if Sweta wants to add something. When you talk about recruitment, because she mentioned it, I think it's also very important when you monitor data is to monitor out of these people that you hire or that you to fill a position, how many come from the internal pool and how many do you get externally? Now, at the beginning, you have to rely a lot on external, right? And that's what we've done when you start. So this is where the flow versus the stock matters. And over time, you have to think a little bit, right? You also have to make sure that the internal women or people, actually also male, by the way, right? It's not only, but that, you know, that balance of how do you manage the institution by really supporting people from the bottom up versus getting people externally. And I think that's where it's we are looking at it. And the last thing for us is to monitor the exits. Not retire. So there's one thing that helps us is the retirement, because way more men leave to retirement. Just that's a stock issue. The more men in the institution, more of them. I mean, not more of them. The same amount leave but in number it's more. But it is to look. Do we get to attract women, but also can we retain them? And that's a statistics that we also look very closely. And it's also very important to look them at very level, because what we have seen is we have lost, if we can say, a lot of women, but that's because the institution has changed and the type of jobs have changed. So the lower level, which it used to be done primarily by women, we have way less of those. And so you really have to look at the different levels of the institution, but keeping in mind and being able to monitor the exit is just as important for me to understand the dynamics, and again, to understanding the balance between the flow and the net flow coming in, coming out, and how does it move your stock. I'll stop here.
That's really interesting. And so much of our conversation has been really been focused on sort of on the new entrants, but you're quite right. We need to also think about the other end. Sweta, unless you have something you wanted to add to this, I do have another question I'd like to broach with Andrea. Sweta, did you want to add something?
No, just that. I mean, like, you know, when we are hiring, as Andrea was talking about, to monitor how many are internal candidates, how many are women candidates, and all these kind of things. What I have noticed in the last 2 years, I have hired, I don't know how many people, and whenever I have actually proposed a male candidate actually to be hired, I had to argue, give a 2-3 page explanation why I'm hiring a male over a female if there was one available. So there's a lot of emphasis on you know, trying to get our 50% in place. That's all I wanted to add. Thanks.
Well, that's really helpful, because the question I was going to ask Andrea was about unintended consequences, and I think this is something that Elizabeth McCall raised in the previous panel, sort of avoiding having a large cohort of disenfranchised men, I think was how she put it out there. Maybe you could tell us a little bit about how you think that one can keep up the momentum within the institution and keep up support within the broader population of institution for increasing diversity.
Absolutely. Look, I mean, in the end, we need motivated staff. We do. First of all, it's about being clear about why we need diversity and inclusion, right? We call it's mandate based, meaning we have a job to do. Elizabeth earlier said it very nicely. And how do we do that job well? And it is by having a really diverse team. Women is a very important part. It's not the only aspect, but it is a very important part. We're 50% of the population. But it is the why, first of all. It's really, we're not hiring women to hire women. We're hiring women because we want women on our teams. And I think that has really changed the way we look at it. But I think it is about looking at the data and understanding that, and again, it's also the maturity of it, right? Is looking at the flow and the stock, and we have to be gung ho. We need to be ambitious. We put an ambitious KPI, and it's very upfront. But we also have to be, again, I said, external, internal. Even women sometimes get discouraged because they say, well, in their new position, there's so many externals, right? How can we compete? Well, we have excellent women. So that's not the point, right? In fact, but it is kind of, and then when you think about men who feel, well, so it is from a stock perspective, it's very important to understand where is that right balance. There's no magic number. I think it is about working with the team, making sure it is, as I say, mandate driven. It's about how do we get our job done well? How can we move in that direction? But it is about being clear. You don't want, you don't want to lose a big part of the institution. You want to make sure they're all part of this discussion. And so in my view, it's very important. And again, the earlier panel brought it up nicely. Diversity KPI on gender or on different diverse group are important. The data matters. In the end, it's not enough. You need to move to the next stage, which is inclusion. Make sure that that team works together in a nice way and supports each other. And there, I think inclusion for me, we live in a world where there's so many changes, also technology. The roles, societal roles are changing. And it's important to understand how does that change the work we want to work together. And I think a lot of the discussion, so I use technology also as a big impulse towards greater inclusion, diversity inclusion, because it's not that we just need more techie people. In fact, the more, we know that the more, I'm going to use IT, not even going in AI the more IT people, the more we need the policy people, and vice versa. The more we need to tackle these new questions, because we are entering in, we've been in uncharted territory for years. It's not clear we're ready to move necessarily out of uncharted territory from a global economic perspective. We need different people. So the policy, the analysis needs to be done by really high tech. We need to use the data. We need to use the latest technology. We need these different brains, different perspectives to work together. And I think that's a great opportunity, and that's an opportunity we need to harness. It is a challenge because it is managers, it's a different job they have. It's no longer, I'm going to say this very meanly because that's not what I mean, but it's no longer do the people, abide to the rules and regulation. This is when I say yes, this is when I say no. It's about the people. And I think for me, that's a great opportunity. An institution that have managed to bring in this broader perspective of diverse thinking and how do we work in an inclusive way beyond, beyond these more traditional gender, race, geography, but really how does each person can contribute. I think that's a really, in my view, very important part.
Well, that's excellent. I wanted to shift gears to technology. So you're both making my job really easy for me. So the next question is for Sweta, and so referring to technology and the technology that we're all using right now. I mean, something that came commonplace in the pandemic. Teleworking, as the European institutions like to call it, but sort of Zoom calls, team calls, and all the other technology. Maybe you could tell us a little bit about how that shift has helped both women and men with their family responsibilities in terms of balancing, care for children or for their elders, and how that has you've seen that within your own organization.
Okay, so thanks to COVID, we are so used to this thing. But the biggest challenge in Africa, at least where I find there's a big gender, as we call it, gender digital divide. So there's a big divide between men and women being able to access and having access to, internet or data and any of these kind of things. So it actually hasn't helped much, basically, in our continent. But definitely being able to have that flexibility to be able to work from home has actually helped. I mean, like everybody talks about it. Let me actually just say one thing, when we talk about work-life balance, because this has also helped in that. Right now, just to give you a sense, I'm working from home. By the way, this was supposed to be a day off for me. It's a floating holiday. But working from home, people tend to say work-life balance is a more women's issue, and I don't think so. I think actually, even when I was at the IMF and even here, I think men tend to demand more work-life balance than women do, actually. I have to say that. Having said that, it has helped, but what I find as a problem is that it has not reduced the sharing of unpaid work that you have to do at home. So women tend to actually still have that burden. And I don't know how bad it is actually in other countries, but in the regions, but at least in Africa, women have a huge burden to carry. All the household work needs to be done by women. Think about a village where the woman has to go and get wood in order to be able to actually, prepare a meal. I mean, like, just think about it. How much of that sort of work women have to do in this part of the world compared to the other parts. So technology and having access to all these things have helped, but digital divide remains a huge barrier in Africa, in this part of the world, where it hasn't actually helped bridge any sort of gap. And unpaid work burden has generally been a woman's thing right now. And I was thinking, when the last panel was also talking about some of the interesting things I actually find is, I don't know if anybody has ever watched that one of the very famous TED Talks by Sheryl Sandberg from Why We Have So Few Women at the Top. Something that she said, and I always tend to remind everybody, she only said 3 things that for gender equality. She says, one is sit at the table. Second was don't leave before you leave. And the last one was make your partner a real partner. I mean, like, sharing that unpaid household work, and that is so important. And so from the region I come, I leave it at that actually, and I'll come back to it if you have more questions about it. Mm-hmm.
So,
well,
Nick,
maybe jump in.
I know we have a few minutes. I don't know how you want to use them, but I'd be happy to add something on this. I think it's very important. And look, work from home I think it's still a development. We don't know where we'll be in 5-10 years. AI may also change quite a bit, where people may actually want to be in the office, because that's what differentiates you from anybody else who can do the work. That's a different discussion to be had. On work from home, for me, I'm very sensitive to one thing, is again, data. And it's not so easy, because you don't want workers to feel you're collecting data just to check what they're doing. No, but I want to make sure, and I've asked the institution, that there are no biases that develop here. In some countries, I come from Switzerland. I used to be on the governing board of the Swiss National Bank, and actually in Switzerland generally, we had a big part-time gap. Where part-time was really done by women. So this was not a central banking issue. This was a societal issue. It had to do with schooling, with many, as you know, right? But the point is, I want to make sure that we don't develop, or at least we're aware if there is a bias that builds up. Meaning women find it, I'm just saying, I'm not saying this is what I'm finding in the data. I'm saying it is something we ought at the top to monitor, that there's not suddenly women find it more helpful, but in the end, if it does, if you see the gap, then it turns against them. And I see it also not just women, right? Can you see differences about different types of contracts, right? If you're an open-ended, if you're fixed, if you have so I want to make sure that whatever is there is really done in an inclusive way, so it doesn't turn against a particular minority, because that would really work against the whole thing that we're trying to achieve, which is to have the discussion among the people that we need to have to really make the best decisions.
I'm quite with you there, Andrea. That's really helpful there. And then also maybe on this point, thank you to Sweta for dialing in on her day off. That's also a very illustrative example too. We are at the end of this panel, but thank you both so much. I'm glad that also Andrea touched on her in her earlier remarks about AI. That was one point where I wanted to have too, but I really feel we the whole circle here. So I would end this panel at this stage and then hand over to the concluding dialogue of the conference, namely between Natasha Kaznav, the Executive Director at ESMA, or the European Securities Markets Authority, and Petra Hitkema, the Chairperson of IOPA, so the European Insurance and Occupational Pensions Authority. So they are having the concluding, they have the last word of the conference. Over to you both.
Yes, well, thank you very much, and I really mean that deeply to everyone in the panels, and very much to my sister authority EBA for organizing this event, for making us get together to discuss this. And I would say, look what diversity can bring. If I think back when we started to discuss diversity, that was often a group of women getting together discussing diversity. Today, you see we see in backgrounds in where we are in the world, where we are in our career, where we are as professionals, what we do, what age we are, but also in gender. We see, I think, many different people in excellent panels exchanging ideas, and I just think that this shows how important it is that we actively talk, but also work on diversity. And so a big thank you for inspiring me on a Friday afternoon, and clearly discussing a very interesting program. But that is, I think, what I feel. Natasha, did you hear anything different?
No, I just wanted to also echo, Petra, what you just said. A very big thank you to our colleagues in the EBA for putting together such a fantastic agenda and lineup of excellent speakers. I think it's great. Also, I wanted to thank all the people who have connected, because it's important that we make this all this knowledge and we make it available so that we can have those conversations, and it's not just a happy few people who talk about this and that is really shared. I wanted to emphasize in particular what I heard is that all these insightful messages about linking gender equality with the outcome of what we're trying to achieve and having better decision making. I think a number of speakers, laid that out very clearly, that it's to have more resilient entities, more fairness in the system, and also in general for our mandates to have more women on board. I thought that was excellent. And also I wanted to thank the panelists in particular for sharing such concrete best practices and making it so real, so that we can also connect it with our different experiences and take that back, hopefully, as we go through. I know there was a question in the chat that I wanted to reiterate, that this has been recorded and will be made available. So if you want to listen again to some of those insightful interventions, you will be able to do so.
Yeah, and I think in general, it is good that we don't only take a European perspective, but we really see gender equality grows across borders, and we can really learn from anyone who's in the call. Sveta, thank you. I mean, some of the insights, I think, in particular parts of the economy in the EU, we also still have a lot of work to do. And I very much like the term inward-looking boards, and I think actually also some technical universities are still maybe inward-looking universities, and so it is about setting the culture, and why we do this. Yes, it's important that we do it, and it's important that we keep it alive. The topic, because I do sense sometimes some tiredness with the topic. Some are we not there yet? And I would say no, we are not. Whereas a lot is coming, and now I really focus on the gender. And some people touched on it: care and career, and balance. How do you do that? With flexibility, for sure. I truly believe that is something that is necessary. That doesn't even always mean that you're not in the office, but that the hours are flexible when you are. And you need to monitor that so that it doesn't result in women then being very flexible and men not, or some caring men being, and then other women are not. And why is that important? I think many of the challenges we see today, a lot of the solutions as actually women are looked for to help with the solution. So if you think about the fact that we have an aging population and that people get older and that parents and maybe sisters or brothers need care, people think about women. If we look at the fact that we have a gender gap, but in payment, but also a pension gap in general. The suggestion in some discussions is that women also have a lot more babies. And then in the end, if we think about it and we look at productivity in this discussion about productivity levels, the idea is also that part-time women, working women start to work more. So there's a lot of solutions where women are involved, but if we have to take care of parents, have more babies, and at the same time be more productive in a paying job, I would like to really iterate that will be a challenge. Maybe not impossible. Maybe more people in the workspace could actually be a solution, while we also jointly care more with AI, with flexibility. But I think this is why the topic is so important and needs to be an inclusive dialogue, because we have to do it together. And I think this is a great way to keep it alive. What do you think, Natasha? Are you also seeing this development?
No, I see that, and I think I would bring it back also to, as European supervisory authorities, what we can reflect on what we heard. I think on the one hand, this point that we're not really where we want to be, although in the EU, as Nadia Calvino mentioned very clearly from the very beginning, it's really core to the European Union values to make sure we have this equality across the board. So we still have a long way to go. And even though it's not as acute as Sveta was explaining in some places of the country, in some places of the world, the gender gap or some of the problems we have, we certainly do have also in the EU, as you mentioned, Petra, financial inclusion issues that we want to look at how we can make it a better offer for women so that they also can care for their future and that they can be better equipped. So I think it's also a duty on us as European supervisory authorities to make sure we can contribute as we can to this particular agenda, and how can we take lessons from the experiences that have been shared today to think better and harder on how we can contribute to improving financial inclusion, thinking about helping women who tend to have a more conservative approach and be more risk averse, think about their future and dare maybe participate and save for their future. I also took the different views that were expressed on improving women representation. So in the financial sector, we're not where we would like it to be. Carmine gave very devastating figures of how low those numbers are, but then Sam Woods told us that you can have also some solutions coming from the market. So possibly maybe there can be some initiatives that would be beneficial, or maybe Hedwig mentioned that law changes can actually make an actual difference. So there are tools and there are some mechanisms that can work. And Elizabeth mentioned that from supervision also sometimes it can work. So a lot of food for thought, I would say, and positive thinking of how we can improve maybe looking ahead.
Yeah, and just quickly, because I really liked what Nadia Calvino said about, and now let's talk diversity at home, and then explained how it is at the European Investment Bank. How is it at ESMA?
Yeah, so I thought that was also, for me, very inspiring to see, okay, there's a lot more we could do. So if I look at home, we are in a relatively positive situation in the sense that we have slightly more men than women in our staff base, so around 55%. In managerial positions, we're more around 50-50, so that is working well, but I think we should never take that for granted. So I heard a lot of very positive insights, especially from Andrea, very concrete messages about how you look at the pool of talents, how you monitor what's happening, looking at exits, trying to look at the evolutions over time of the structure of your staff base. So I think also I took a lot of feedback. One point I wanted to share is also this that gender is a very important element of what we're trying to do at ESMA. We also adopted a new diversity, equity, and inclusion strategy this year. We're trying to do it in a robust way to try and look more holistically also at other aspects to make sure every staff feel valued. But I heard a lot of interesting suggestions on how also there is still more maybe to be done to help women in their day-to-day, in the work-life balance. So definitely I will take that back with the diversity ambassadors we have here at ESMA. How about EIOPA? What does it look like for you?
So I think we're quite balanced at the top and at the bottom, but I very much recognize the pipeline, very much, and I also very much recognize the industry Here I welcome the fact that actually the law for regulation on insurance and also on pensions, IOP 2 and the Solvency II directive will hopefully both include now a requirement like in banking to consider diversity. So that's an improvement. We need to continue to work on the pipeline. We have a leadership program, the first 2 years only for women, but now also including men. We need men as much as we do women. And at the same time, we see that when people enter this, they're really hopeful and they want the job, and then they get sometimes really disappointed if the first time doesn't work. And here, before I hand back to François-Louis, I just want to repeat to all the women and men in the call, also on my own experience, don't tick all the boxes of a vacancy when you see one. I think if you approximately get to 2/3, think as a man. Go do it. Here we can learn. Just have a bit of faith. Try. Have the experience, Elizabeth said. I like that. And don't put yourself out of the competition if the first time doesn't work. I think we need many talented people, not always at the same time, but then in a different order. I think we can all build a career because we need everyone, and we definitely need also the talented ones. And I think there's a lot of talent in the call. And with that, I will add to diversity by letting a man join the conversation and hand back to you, François-Louis.
Well, thank you so much. Thank you so much to the two of you, Petra, Natasha, and to all speakers. Frankly, it's been a fantastic conversation. So thank you really from the bottom of our hearts here. And we've learned so much. I think it was so enlightening also to hear it from other jurisdictions, not to be entirely focused on what we do and where we are in Europe. So it was really, really inspiring. And indeed, we have still a long way to go, and there are specific aspects that we are going to be working on in the coming years, especially this pipeline issue. So that's really good. So many thanks. And with this, I wish you all an excellent rest of the day and see you soon. Thanks a lot. Goodbye.
Thank you. Bye.